investors and traders, and welcome to the weekly market report with the market guys. I'm AJ Monty. This is a 1-year daily candle chart of the Dow Jones Industrial Average ETF, and I left my channel lines on the chart so we can track the progress of the market and also analyze the trends. And as you can see, we are still stuck within this trading channel. And if I zoom in on the weekly chart, you'll see that we did have a slight breach of the resistance line for the week, but the market came right back down, closing below resistance on lower volume. Now remember, we are tracking volume very closely because the volume is really a leading indicator for us. As prices continue to go up, like we see here in the past 8 or 9 weeks or so, the volume has been steadily dropping. And that is very, very important because it tells us that the buyers are running out of steam there, and that, of course, attracts the sellers into the market to either take profits or even sell the market short. Now, earlier in the week, I put out a report that compared the Dow Jones Industrial Average to the Dow Jones Transports. And what I want to show you here is an ETF for the Dow Jones Transportation Average. And this is showing a very, very different picture because if you'll notice, we're showing lower highs each and every week with an acceleration of these lows, especially this week. We set a new low this week for the past months now. This is only almost 3 months. We closed on a low for the week, and notice the volume increasing on that big red candle. So if you've been tracking the Dow Jones averages, particularly the transportation average, you'll know that the transportation average actually leads the industrial average. So this is a big red flag for us as we move ahead. If I zoom in to the daily chart, you're going to see this acceleration, especially in volume. Now, if you look down here on the transportation average, we still have a gap down there around 148. So we could still drop here to fill this gap, and in turn, that will draw the industrial average down as well. Now, in comparison to that, I'd like to look at the spiders. This is SPY. We have, again, a stall at the top on much lower volume, and why I'm looking at the spiders, you have to compare that to the S&P Volatility Index, and that's the VIX. The Volatility Index is a leading indicator, and I left my lines on here from last week so you can see the big triangle pattern that's forming. This week we bounced off of this low right here, which is support. You can see that's the bottom of the triangle, and my forecast for the VIX is going to look something like this. I believe that we will move up to break through the upper part of this triangle, which is acting as resistance. And when we do that, remember the VIX is a contrarian indicator. As the VIX moves up, the S&P and other major indices will start to move down. So again, red flags are still being waved. Be careful of any new long positions that you recently have taken on, or you might want to put very close stops below your positions to protect from a downside move. Now, as we look at the Russell 2000, this is extremely interesting because this is a more broad-based index. I've left my lines up here for the Russell 2000, and I did say that we would move up and potentially pivot. We're right at that pivot point. Again, look at what's happened here. We are following this new pivot point, or we're following this line that I drew last week, because I think the Russell 2000 is going to start to drop, also forming a lower high here, which again is bearish. This could very well turn out to be a complex head and shoulders top, with this being the neckline. If we drop below this level right around 1220, then watch out below. We still have gaps below the market in the Russell 2000 as well. Now finally, if you look at the Qs, this followed my forecast almost exactly to the penny. Last week I did say that I thought we would move up to test this resistance high. Remember, go back and look at last week's report and you'll see these lines are exactly where I drew them last week. and we're right at that point where we've tested the highs. We have a little bit of a doji here with a shadow above the market, and this is going to be a line I'm going to keep in place as my forecasted trend for next week and the weeks after that. Notice the drop in volume. Again, very important. Volume is a leading indicator. So if prices are going up and the volume is deteriorating, that's telling us that the buyers are running out of their excitement to buy, especially taking new money to buy, and the only thing left for them is to sell at a profit or start to sell in stop loss fashion where they're protecting those profits. So watch out below on the cues as well. Finally, if you go to the Market Guys website and click on the videos tab, you'll find our library of what we call market shots. I am adding educational content for a members only page. So once you become a member, you sign in, log in as a member, and you'll see another page of PowerPoint presentations that are going to be longer in their time. They'll probably be 30-minute videos giving you full lessons on how to trade these strategies. These market shots are 3 to 4 minutes in length, so if you want a quick jolt of information, you can go here. But if you want to sit back, get a cup of coffee, and learn a little bit more in depth, you'll go to the PowerPoint presentations where I'm going to give you some lessons that are going to be about 30 minutes long, like I mentioned. So we're very excited that we're continuing to add educational content to the Market Guys page. Stay tuned. Each and every week we put out those reports and we update our Facebook page. Don't forget to subscribe to the Market Guys Facebook page because I do post information that's relevant to trading and investing, and you want to pay attention to that too. Have a great long Memorial Day weekend. Thank you so much for sticking with the Market Guys, and we'll talk to you soon. So long.